Hey everybody, it's Tom Dotan here. Welcome to this week's episode of the Newcomer Podcast, shortly known as Newcomer. I'm joined here by Eric Newcomer, Madeline Renbarger, and our special guest, Danny Reimer of Index Ventures. Welcome to the show, Danny.
Thank you very much. Nice to be here.
Are you, by the way, in the San Francisco Index Ventures office? Where are we right now?
Thank you for asking. I'm actually in our New York office.
Oh,
that makes sense.
That makes sense.
What is happening this week? Figma is going public and you are on the board, so I imagine it's a good week to be in New York.
Indeed. It is a good week. It's always a good week to be in New York, but definitely this is a momentous week.
Is it New York Stock Exchange or is it NASDAQ?
New York Stock Exchange.
Nice.
Okay. So you get to go.
You get to go do the whole place.
Circumstance.
Exactly.
Do a little ringing.
Exactly right.
Yeah, I mean, we'll go deeply into Figma in a second here, but this is not your first IPO here. Have you done the bell ringing before? Have you been on the floor as one of your companies was out there?
I've been to the NYSE and NASDAQ for my companies. I'm very privileged. But my policy is actually not to ring the bell because I feel like, it's really about the team and the founders and their family. And so it's not something that I think makes sense for us to do.
Skulk in the background,
Yeah.
Exactly. That's
Admire from the sidelines. Happy to be there.
That's right.
The floor is dangerous, though, because reporters hang out there.
I know
the one time I ever did a stock exchange debut thing, I was like really snaking around the floor trying to find the investors in that company. So that's very bold of you to hang out there.
Yeah. Thank you. Yeah. I'm used to it.
Well, I did the Uber one, and I'll always remember, Travis Kalanick was up in the balcony. He sort of like couldn't be in the fray with Dara and everybody. So it was a sort of funny dynamic. That one, I mean, Uber's done well, but that was a reminder like, oh, the day itself can be painful because I think the markets were just not good. And so it was a hard one.
Yeah.
Anyway, we are recording this on a Wednesday. And this will come out on Friday after Figma has gone public. So you get to safely sidestep the how do you think the IPO went because of the timing.
We can't get your assessment of was the pop too big? Was money left on the table?
That's right. Exactly.
Yeah.
Exactly.
So tell us the Figma story for you guys. I mean, you were one of the first, maybe the first VC investor in Figma. So you and Dylan Fields go way back. What's the origin story?
Yeah, we were indeed. So the origin story is quite a long one. I mean, it's sort of interesting, right? In this industry, I was just reflecting, for other investments that I've made that have gone public and also that have had liquidity events. It's not always a long journey, but this has been 13 years. He was 19 when I first invested, or when Index first invested. So it's definitely been a journey with ups and downs and with chapters. And so there's something really gratifying of being able to remember and reflect on this journey. Sorry, that was a long-winded, even preamble to your question, Tom. But I was just, I was getting a little philosophical about it.
Well, the length, I think, is key to this. Both that Figma raises sort of pre-traction, and some of your bet is like before they really had sort of the viral takeoff. And then obviously
before they had a URL, I think, right?
Yeah,
they didn't even have a website
before the URL. That's right.
And then down the line, there's the acquisition that wasn't of Adobe trying to buy it for $20 billion.
Yeah, there's pre-seed and then there's pre-URL. Yeah.
Exactly. To answer your question, so first met Dylan when he was an intern at another company that I was on the board of called Flipboard, which was this really sensational company in its time where Mike McHugh, who was the founder of Tell Me, which was another company that we had invested in. Actually, I wrote his first check ever in that one that sold to Microsoft. And Dylan was an intern. And at the time, just really remember his enthusiasm and his amazing ability to communicate information with enthusiasm, but also with detail. And then lost touch with him because he was an intern. I've taken a note that I should do a better job on tracking interns. And then resurfaced after I was having a conversation with Jeff Weiner from LinkedIn, who's a good friend. And I was telling him about this thesis that we had on who's going to inherit the mantle of the most important business franchises out there, like Microsoft Office and Adobe Studio, and he said, well, you should talk to this intern that I can't get to stay at LinkedIn called Dylan Fields, because he wants to do something around the area of design, and I think you'll really enjoy the conversation. So that was how I met him again. He came to pitch what was not Figma at the time, but to pitch his idea with Evan, his co-founder.
Well, and so much about Figma, you mentioned, it's about design, but essentially the customers for it are UX designers, people that are trying to kind of mock up what a product is going to look like what a digital experience is going to look like. I mean, that industry has changed a lot in the 13 years or so since you first made that investment. I mean, can you kind of situate to us like a bit in time, like how Figma has evolved to a point where, they are a company that's going public, but also one that probably is facing more competition and threats than they have, a very different kind of competition and threat than they did, in their earliest days. I mean, how have they evolved?
Yeah, I mean, just to give you context, when we invested in Figma, the concept that we were interested in is, at the time, most of the startups that we were working with use Sketch and Dropbox. So Sketch for design internally and Dropbox for transferring those files between people, because
and obviously you were an investor in Dropbox.
And reached out to Sketch, but Sketch did not want to take investment at the time. And so it was quite, Sketch was a good product, but it was quite complicated for versioning reasons and for sharing reasons. And then Figma came up with this concept of multiplayer from the get-go. And so that felt like all of these headaches around designing and sharing were going to go away by this new means of designing and sharing immediately. That's really what led to the interest that we had in Figma.
It's like there was this thing called cloud, and they could store the designs. It's amazing what a different era it was.
Exactly.
Yeah, it was like, there was new careers that were being created and the types of designers. There were new ways of file storage. There were new types of software that can be developed. And then I think, jumping to today, there's this sort of, will designers and product managers be coders? And, Figma has come out with 4 new products this year. I mean, some are targeted marketers, and so there are lots of categories they're trying to go after. But I'm curious, like specifically on this, like design is the beginning of code. Do you see that as like, it's more just sort of like the mock-up, or do you think designers will be like real coders? Or what's sort of your sense of how these sort of like make tools are going to develop?
Yeah, it feels as though, fundamentally, the relevance and the core of design has only become more significant since our investment. I mean, it already was becoming slightly more significant. Like I remember that Facebook at the time would offer more money if you were an employee at Facebook and had given a reference that was hired and it came from you. So you'd get paid more as a reference check for a designer than for an engineer at Facebook. That was back then in the day, and sort of highlighted the fact that the importance of designers is increasing, just merely from what the market was going to command. And I think that design relevance has only increased over time, and that the lines between who's a developer, who's a product manager, who's a designer has really blurred. And with all of this AI technology that is enabling, with vibe coding and the notion of being able to instantaneously create software, the role of design as the primary differentiator seems to me more relevant than it ever has been.
Are you bullish on vibe coding as being sort of an essential way that stuff gets created?
That's a really good question. I think that the notion of ease in actually manifesting something, whether it's through being in a vibe mode, or being very deliberate on what you want to code, irrespective, that's happening. That trend is more core. Now the question is, what is the result of that mode that you're in? And design is going to be central in whatever mode that you're in. So I don't know if that's helpful. I think it's premature to know whether there is indeed this mode.
Right.
The way that I'm thinking about it, Eric, and maybe this is not a good parallel, is if you think of jazz, I'm a huge fan of jazz. Jazz is a vibe concept. Like
right.
the vibe of improvisation is what creates the genius of jazz. Whether that translates to something like coding, I don't know. I think the jury's out. Irrespective, the layer of design is going to be critical.
The jazz parallel is an interesting one because it's also, the improvisational aspect. I understand the parallel there, but jazz is also highly technical. You have to be like a very skilled musician to be able to really have the fundamentals to mess around in the way that people do in jazz. Whereas vibe coding to me sort of lowers the bar of entry.
Yeah, people who are not typically software developers can at least, you website a website rather than, having an expert need to do it.
We're talking about a lot of worlds that I'm an amateur and an aficionado
Isn't
of,
that,
but I'm
that's
not
a VC job. Yeah, exactly. You covered
exactly.
all of it.
Exactly. But there are some musicians who can read and write and are really technical, and there are some musicians who never learn.
Go all by ear, yeah.
Yeah, so they don't compose anything, but it's off ear, and then they're phenomenal musicians. I don't know what's going to happen there. But what's clear is that, again, this notion of there are all these tools at your disposal. It's probably never been as easy to create music as today. But at the end of the day, there is this layer that happens where you have to take whatever your output is and really work on it to make it resonate.
I mean, I interviewed Dylan at Cerebral Valley AI Summit London not too long ago, and we had a great conversation. Obviously, I played with a lot of Figma's products before that. I'm pretty bullish on Figma, like the design tool. I get the story of like extending it to sort of like different categories, like you're doing a business plan, you're a marketer or whatever. To me, the make and the sort of like vibe coding thing is, I don't think it's like existential necessarily to Lovable. Lovable. Existential to Figma, and the threat of Lovable is clearly there. But like, I do think there's like, is make sort of quintessentially Figma or not, to me is like this sort of interesting question. Because in some ways, like design and Figma are so like intentional, and you have like these rules, and you're like, okay, these are our design principles, and we like stick to them. And in some ways, like, these vibe coding efforts are so like hacky, and obviously we're going to try to sort of bring those two worlds together. And I guess I can't tell yet whether I really think they meld well or not.
Yeah, I mean, we'll have to see. I mean, I'm super excited about Figma Make, obviously, because I think that the notion of having all these tools at your disposal to mean that the entry point for you to start making things is lowered. And then there are all these tools at your disposal to make the output much more sophisticated. That whole journey is really enabled through Figma Make. And I suspect that that's going to mean that what we're going to see out there, AI and the trend of AI is undeniable, right? Like as bearish as we were about crypto, is as bullish as we are about AI. So
Index was bearish on crypto.
Yeah, I didn't know that. You kind of dropped that one in there, Danny.
Yeah.
What's that about?
Oh, no, we were just like not Bitcoin, but like the whole, the Web3 concept of crypto. This is fundamentally Web3, right? Like AI is Web3 for sure. And so the concept of what Figma Make can do in terms of getting more and more people to actually create things, and then have all of these tools at your disposal to really refine what your output is going to be, is super exciting.
I mean, Eric's sort of maybe in a Freudian sense dropped Lovable in there.
It's the elephant. It's the tiny elephant in the room, though high valuation. But yeah.
What's your take on them? And the reason I want to ask you specifically beyond just the Figma side of things is that when I think Index, I really think you guys are maybe the most one of the largest, most aggressive players in the European tech market. And Lovable is, if they can really, hit their numbers and achieve what a lot of people are expecting, could be one of the bigger breakout hits from Europe in a while. I mean, have you had a chance to look at them? And
not a ton. I mean, the reality is, as you know, we do focus on few geos, right? Like we focus on the US, on Europe, on Israel, and that really is our core. Like across the board, that's our core. Figma is 85% of its users are international, so we see it as a global phenomenon. There are a number of really exciting new players, Lovable being one of them. But, beyond that, don't have much of an opinion.
You're saying you can't hammer us about one European startup. We want to hit all the best all over the world? Or I'm trying to understand the global point.
No, so in other words, the global point is when we look at companies, we look at the geos that we think we have a good enough understanding in picking what we think will be the best teams to go after. So we don't sort of view ourselves as primarily European or primarily US or primarily Israel. Right. And then we try to find global winners. So my point is, if it has global appeal, as it does with Figma, that ticks the box of what we're looking for.
Oh, I see. But not because Europe is our turf and we need to, I see.
No. So for instance, we looked at Stripe and Adyen and we thought, for a lot of reasons, Adyen made enormous sense for us. Jan, my partner who was behind that, looked at the space and thought Adyen was a phenomenal opportunity, which it ended up to be.
Right.
I covered Adobe when I was at the Wall Street Journal, and I had the blessed experience of writing about the Adobe Figma deal falling apart. My predecessor on the beat was the one who wrote the story about the Adobe Figma deal happening. It's a weird situation where I imagine when the acquisition first gets announced, that comes off as like a big victory. It's an exit. It's one of the things you hope for when you back a company 10 years before that. Explain to me what was going through your mind when the deal first happened and whether you were optimistic it would actually go through.
The reality is we really look to invest in entrepreneurs who want to build a standalone business because it's just impossible to assume that a company is going to get acquired and that's a really great exit strategy. Maybe things will change over time, but certainly it's proven to be a terrible idea. It also is a means of separating folks who are there for the economic return of starting a company versus those who are on like a mission, like Dylan and Evan were, to democratize design through this platform. So really, we always assumed that Figma was going to be an independent company. In addition to that, in most of the cases, just from a return standpoint, as a VC, the returns are much greater if the company is an acquirer rather than acquiree, right? Like if you are a public company, you're much more likely to become the one that acquires rather than be acquired. So there are a lot of economic reasons why being a standalone company makes a lot more sense, with a few exceptions. So if you go back there, the first point would be we were very happy for Figma to stay independent.
Were you against the deal when it first was being discussed?
What I was going to say, on the other hand, we always respect what the founders want to do, right? Like at the end of the day, we are privileged to be on this ride and will be as helpful as possible, but they're running the show. So if the team thought that it made economic as well as structural sense to be acquired, then we weren't going to vote against it.
I mean, it was clearly a huge valuation, right? I mean, it was $20 billion three years ago, right?
I mean, analysts hated the deal. Adobe analysts thought it was completely overpriced.
Yeah, exactly. Yeah. So it's like clearly from a fiduciary point of view, it seemed like a good deal for Figma.
No, that's right. That's right. And just like Wiz is a good deal, I mean, the Google Wiz acquisition makes a lot of sense. So if it makes economic sense, if it makes structural sense, if it's what the company wants to do, we're obviously going to play ball and be supportive of it. Then there's the question of like all the regulatory approvals that are necessary and how much of a hurdle that's going to be. And so we never high five ourselves when a deal gets announced, because we know that the journey is going to be so long.
Can you talk about the company resilience point of view? I mean, just being a tiny entrepreneur, I can imagine you think you have the exit. You're like, okay, we've made it to a certain goalpost, and it's easy to lose steam. And certainly lots of companies sell and then do lose steam. What did it take for Figma to stay strong, to get to this point of going public after sort of seemingly almost hitting a sort of goalpost?
Yeah, that's such a good question. And I actually must say that if I were maybe that's part of the reason why I'm not an entrepreneur, right? Like, I would find the morale issue, but also just the schizophrenia involved of thinking that you're going to be part of a company, right, thinking that you have to be independent.
Now they're the great enemy. Adobe's our friend. We love them. Now they're our arch rival.
And this goes on in and out for 12 months. That is really challenging.
Right.
It was amazing to see how from one day to the next, I think, having finality, having clarity, and also just like always having the drive to build a standalone business. Back to your point on value, like, it's very clear this was not out of necessity from a Figma standpoint, right? Like, they had a great business, but from one day to the next, they turned the page. They offered this awesome severance package for anyone, no harm, no foul, who wanted to leave. Less than 5%, I think 4% of the employees decided to leave and take that huge package. And then the rest, from one day to the next, like, we are just going to build the most awesome independent company. We're so excited about this. And they just went for it. And to your point, Eric, they announced in the Bay Area and in London, they came out with as many products in a year as they had in the whole history of Figma, right, prior. So you can just imagine how much of a driving force it was to show the world, to show themselves what they could do.
Yeah, my sense as a reporter covering them, or who met with them during that time, was like extreme compartmentalization on Figma's part. Like, I went to their offices, and obviously this was a regulatory matter, but they just couldn't talk about Adobe. It was as if the deal didn't exist as it went through, and they were just trying to run things business as usual. And then, when the deal eventually falls apart, there was an interesting kind of media push I saw from the company's part to sort of talk to the press and say, like, things are good. We all have it in line. This all worked out, and Figma, is in a good position, despite the fact that, they've been in this purgatory for the last 12 months.
This is a benefit that not all companies have, is that Figma truly has a community, right? Like, they do not have sort of uninterested customers, right, in what they're doing.
Exactly. No, when I was doing prep for the Dylan thing, I went on Reddit. Like, you can read all the, everybody has strong, right, opinions about what they should do. It's a very, right, invested customer base.
And not only that, right, they're an invested customer base that did not like the Adobe deal because they were worried that Adobe was going to fuck up the product.
Exactly.
They're like, I'm using this product, right? Yeah.
Yeah. I mean, I would have said it was sort of mixed. Like, there are definitely members of the community that could see the benefit of having one suite where they would pay for everything, et cetera. But yeah, I mean, the reality is the community is vested in the company, feels like, and correctly feels as though, it's thanks to them in a lot of ways that the company is successful, that they've given so much input and they've bought the subscription. And so I think that in the back of all the Figmates' minds was like, we got to deliver for our community here.
Yeah. You obviously have really conflicted feelings about this, since, as you were saying, you would have preferred them to remain an independent company. They did. The return will end up probably being better because of that over time.
That's still to be seen.
Yeah.
Right. Well, they have the opportunity, at least now.
Money in the hand several years ago. But, like you're saying, you want to be an acquirer. Yeah. If they continue to grow, there's upside, Yeah.
Anyway. Well, but here's my question, though. I mean, did you think the regulatory intervention here was good or bad? Was it overreach? I mean, was there a strong case that this was some anti-competitive move by Adobe. And, like, where do you stand on that? Because it obviously has implications for your other companies, whether regulators are going to be more accepting of deals. I mean, looking back on it, like, was this the right call? Like, are we in like an overly austere regulatory environment?
Yeah, I was going to ask, just to clarify, like, what do you have? Has this changed, like, any perspective you give to your other portfolio companies about whether they should pursue, M&A or IPO, even if IPO is always the goal?
There's only so much I'm going to say here, folks. I would say that regulatory bodies just need more fluency when they are going to come up against a potential acquisition. And that's what I wished had been the case in the Adobe Figma situation. And we'll see what happens with other situations. I can't really comment more on that.
I wanted to talk about, venture broadly and sort of move sort of beyond the Figma story. I'm curious, how much is every index deal right now an AI deal? Or how do you think about like the pervasiveness of AI? I mean, what Anthropic is now, I guess, raising a $170 billion valuation. I feel like we're obsessed about vibe coding. Clearly, I think people are worried about unit economics of some of these companies like Cursor. I don't know. Like, where are you on this sort of like everything needs to be AI right now in terms of like indexes focus?
That's sort of what I was trying to allude to when I was saying bearish and bullish. I mean, so we have an equal partnership. Everyone's got a vote. And we really look forward to one of our partners having conviction behind something, because we want to back their enthusiasm. In the case of the last crypto wave or the first solar wave, like, there was no one around the table who was excited about it.
Right.
In the case of AI, we're all super excited about it. And it does really feel like a monumental shift. Like there was the internet and there was mobile and there's AI. And it's undeniable and it's super exciting. And it has implications across the board, including how quickly companies get started, what the P&L looks like, what it looks like over time, what the characteristics of an entrepreneur are that are going to be well equipped to go after it in this chapter of AI, what it will be in future chapters of AI, how much is business to business AI today, when will the business to consumer wave happen?
Right.
What will it look like?
You can answer all these questions. These are all great questions. I mean, Mark Zuckerberg literally this week. Yeah. I just asked the questions.
Yeah.
I don't have to answer them. Mark Zuckerberg was saying like this week, I think, today when we're recording it, that, they want to be sort of the consumer approach to AI, that I think there are a lot of people focused on productivity, but, their teams can really figure out how can you use this to sort of self-actualize and get everything out of your life that you want. I mean, the question and the topic is sort of consumer in AI. And obviously you've done consumer investing and thought about this a lot. I mean, there's a certain argument that like consumer in AI is just like ChatGPT and that the great consumer investment, just like you needed to hit Facebook, you needed to hit OpenAI, and that's like the consumer investment. So that would say, oh, there's no like consumer wave to come. It's sort of like there was one big company and that's it. Yeah, I don't know. What do you think about that notion, and where do you see opportunity for a consumer wave?
Well, I guess I'll be out of a job, Eric, if that happens.
I know.
And I think we will be very unhappy that Scale, we let Alex join Meta if that was the case as well.
Right.
No, I think
you are a big investor in Scale, which he had this big deal, and then you're not you're not an investor in OpenAI, right? Just
Correct.
Right.
Sorry.
Yeah. Just translating that for people who aren't like deep in it.
Sorry about that. Yeah. I just assumed everyone was fascinated.
But even I had to check. Like, okay, I think I know which investments you have.
Sorry. No, I think that the business to consumer area of AI will not be one company or two companies. That, it's really challenging to build a core competency to the level of sophistication necessary to get millions of users, hundreds of millions of users to leverage products. And so history would serve us well to assume that there's not going to be one beneficiary or even five beneficiaries of a specific sector, but hundreds of beneficiaries. That's true with all the sectors that we've invested in. We've been investors in the gaming industry for a long time, right? And when we looked at it, you could have said there's Activision and there's EA and Epic, but King got sold to Activision and Supercell, and then we have this Turkish company, Dream Games, that's doing super well with this game called Royal Match, which there's no way that you haven't seen ads for.
I think I've seen ads. I've not played it.
Okay. So my point is that you will always have these entrepreneurs that have such passion and knowledge on specific sub areas that they're going to be able to build these phenomenal companies as a result of that. And I don't see why that would not be true for AI. In fact, I suspect that it will be more true because the scale of these companies is going to be so much greater, so much faster, which is what you're seeing with the likes of OpenAI and Anthropic, of Cursor, and a bunch of other companies.
Kind of in the weeds, but do you think that, to have all of these winners, we'll need sort of like the iPhone moment for apps beyond ChatGPT, like to have this consumer application, the birth of the iPhone allowed, Airbnb and all of these great, and Uber to come exist, right? And so we're so early in this AI paradigm shift, where could this be headed? Is it just too early to tell where the next big, companies that could win on top of this next layer are beyond the chatbot?
I'm surprised at how early we are, that this is not, the companies are being formed today. It's still surprising to me on how few consumer AI opportunities we see in relative terms to business applications.
Send your consumer deals to Index. That's what you're. You're like, get building.
Consumer founders, where are you? Come out.
Exactly.
Listen, every founder wants an excuse. I heard you on a podcast. You asked for this company. You better meet with me now. So watch what you.
We will.
Get what you wish for. So,
we will. I promise that we will.
I mean, Madeline, your question was really just in the iPhone moment is that there's going to be like a transformational piece of hardware, I imagine, that allows all of these apps to be, consumed on a per person basis. And I mean, we're recording this, I think the day that, Meta has their earnings, and Zuck talked about how he views, their AI bet as one that is predicated at least partly on these wearables and glasses. And obviously we've seen,
I need to get some Ray-Bans.
Yeah, they've been obviously putting tons into wearables. Yeah, you need to get the Ray-Ban Meta glasses.
Do you need to? I don't know. I mean, well, I don't know. I guess we'll get to a point of social acceptance. Every time I see Zuckerberg on a podcast wearing those things, I really, really don't like it. And him with it. So maybe I'll just be late to the party.
I don't know why he insists on being the spokesman for these we're human videos, but
Yeah, no, him going on Theo Von wearing the glasses and talking about how he doesn't drink coffee was not a great moment of human interaction for him. But to be fair, we also have the true goat of hardware with Johnny Ive, being part of OpenAI, and that's a big part of Sam Altman's belief that this is going to be $1 trillion product at some point. I mean, where are you on the hardware stuff? Do you meet with hardware companies? Do you believe there is something that's going to be kind of a unifying force with all of these AI applications?
We definitely meet with hardware companies all the time. I would say, I'm not sure I would have put Johnny Ive as the true GOAT. I think his boss, Steve Jobs, gets that title, but I'm with you.
Well, someone carries the torch. Yeah.
You get to tell your story if you're still alive. So, yeah.
You can't libel the dead. So.
Okay. Yeah. But, I think hardware is also, we'll see. These tariff things, I don't even know how to think about this. I don't live in the US. So I'm trying to digest that and what the implications would be for the supply chain and what the implications would be on creating the type of hardware that you're talking about. Do I think that you need a fundamentally new platform in order for AI consumer services to be of paramount importance? I'm not convinced of that. I think that mobile devices take us a long way. Does that mean that there won't be some new hardware devices that could transform the way that we interact with technology? No, I think that will happen, but I don't think that they're mutually exclusive. And, the challenge with hardware, it's sort of interesting. Like hardware used to be really challenging. Like when we invested in Sonos, that was a big bet. And I think part of it was our love of music, because it took a long time for that company to be successful, and it's still a challenging space. But hardware was difficult at the time because of all the inventory that you have to buy up front in order to sell it, and you only have very small windows of selling. So hardware investment, maybe for other firms, we have difficulty with it. Then it became a lot easier because of just like the seamlessness of the world is flat and, the supply chain, all of those components working really well, and a global audience. And now it's a new environment. I have no idea how hardware's, can you build truly mass scale hardware devices in one single country? I don't know if that's possible or not.
Right. I mean, I think a related question is just when we moved to mobile, there was like a new distribution channel. So even forget like that it was a new device. It was just like, okay, there was the app store and even cloud. It's like, okay, you can easily sort of embrace new things. It creates new like consumption patterns. So there's a new distribution model. It feels like the AI like platform shift. There's a new technological capacity, which to some degrees, I think as a technology investor is probably the most exciting part. It's like you can literally create new things that you couldn't before, but there isn't that straightforward, like I'm a new business, I'm going to dominate this new channel and that's how I'm going to grow. Like, do you see that channel coming into being, or it's still like this paradigm is sort of the old channels?
Yeah, I think that for the moment, the paradigm are the old channels. I think it will be really interesting to see what the new channels are. Whether you need new channels is also a concept. Like fundamentally, there's a means of actually distributing things that are in bits and bytes so effectively right now. I'm not sure that you need that intermediary anymore.
How much better could it get?
Because we have the cloud and mobile revolutions behind us. Like we have all of this in our pockets right now.
That's right.
When you think about the cost structure for some of these companies, and we were talking a little bit about coding apps before. I'm particularly obsessed with this space right now. Like there's a ton of, are you guys in any of them, by the way?
Yes, we are. We are in Augment.
Oh, okay. Yeah.
There's an interesting dynamic playing out where these companies like Augment, like Cursor, raising a lot of money, big valuations. There's no question in my mind that AI coding is transformational. There's probably no going back for that. But who will end up being the big winners here? Like we've seen Anthropic's Claude Code really, to me, out of nowhere, become incredibly popular and dominant in the space. They obviously have a lot of money, keep raising more to be able to maybe burn on what could be a money-losing product. Like, are you bullish on non-foundation model companies?
To what layer does the value accrue? That's
who's going to win in this
models
space?
Make the money, or do the applications?
Yes.
Everyone makes some money. Yeah.
In coding, it can go all around.
I think the business models are not clear, but given the growth that is being experienced, one has to assume that the business model can make sense over time. And I am bullish on that. I don't think that they've been figured out. And I think that both on the application layer and on the infrastructure layer, there are great businesses that can be built. But I don't think there's a clear model yet that is out there. But if you would talk to investors across the board, where you can witness just extraordinary growth, unprecedented growth, the perspective that you're likely going to be able to build a very strong business model that supports this type of growth is very likely.
I wanted to take the last couple of minutes and talk about venture capital and just like where the VC business is today. I guess temperature in the air, like our sort of continued point of view, honestly, has been there would have been this terrible downturn except for AI. And so like telling the temperature story of venture has been very hard because it's like, well, obviously they're very enthusiastic AI valuations, but there's been some limited partner pessimism. Or how do you make sense of where we are in the venture capital industry right now?
You know, Eric, I'm relatively old, let's face it. So I'm a student of history, and I tend to say the more things change, the more they stay the same. So there's the cyclicality of what happens within the market, and then there's the unconditional, unwavering adoption of technology across the globe that continues to grow. And so I'm not sure that we would have had a massive correction if AI hadn't happened. I actually think a lot of the fundamentals of a lot of SaaS businesses are really strong. It's just that they're not, back to this growth concept that we were talking about, they're not growing in the same vicinity of what you're seeing with a lot of AI companies. And then there are companies that are on that juncture of, are they SaaS businesses? Are they AI businesses? Are they a combination? I think that's sort of what is playing out with the Figma IPO this week. So my view is that, the more things change, the more they stay the same. I don't think that the venture business has fundamentally changed that much in terms of the craft of investors looking to assist entrepreneurs that have global ambition to transform the world and make it a better place through whatever they're working on. However, there are a lot of elements that make the scale of what's going on very different and enables a lot of folks who aren't necessarily coming in for the same level of clarity to participate. In other words, there are a lot of tourists that are involved both on the investment side and on the entrepreneurial side. But the fundamentals of company creation, company formation, and venture capital trying to help fuel the best businesses has not changed.
Helps to have the Wiz exit. Now you have Figma. You're like, we're doing fine. I feel like there are a lot of venture firms that, just have a lot of companies that were marked up a ton in 2021. And I don't know, are not as optimistic about sort of the SaaS companies making it to the next level. Or you must have some unicorpses, or you don't see any hangover from that 2021 period?
I mean, certainly, Eric, but if you had talked to us in the history of Index, right, we've been doing this for 20 plus years, that has always been the case. There have been always companies and cycles where companies that we thought were doing phenomenally well have hit serious roadblocks, stumbling blocks, and then companies that we didn't expect to do well have hit a chord, have the right management team, and are experiencing explosive growth. That hasn't changed. I mean, if you're talking about the industry of venture, from our perspective, it's really maintaining the discipline. Index today is really not that different from what it was. We have multiple partners all doing their work, all contributing in making the overall funds successful. That hasn't changed.
And the IPO itself, we're recording this on the precipice of there actually having been one. What's your sense on where that's going to be? Like, is this an indication of things to come? Can we actually expect more of them this year?
Yeah, so I think, definitely. I mean, I think, look, there are two things that I would say. The first is the best companies can go public in any market, right? You've seen that so many times. Before Google, Facebook, irrespective of market, great companies go public. That being said, there's no question that there are a lot of reasons why the IPO conditions are really good right now for a number of companies that have been developing real businesses over the last years. And there's an enormous amount of appetite from the buy side. And there are retail platforms like Robinhood that are also showing quite a bit of sophistication from the retail investor. So I think that's going to continue to happen, and we're seeing it across our portfolio. Shardul is the partner involved with Wiz, and we have Martin is involved with Revolut. Mike was involved with Scale. Like, we have a number of really exciting companies up there.
Great. Well, thank you so much for coming on. I think the last thing, just to sort of end on a piece of advice. I mean, if you were to give a piece of advice to a startup founder right now, like whether they're looking for a category or just starting a business, like what would be your core piece of advice for them?
Come and visit Index.
All right. What?
This is the call for consumer AI companies again.
There's a call, but we're open for business across the board. Please, Tom. Also business to business. No, I mean, the biggest piece of advice that I would give, and I wouldn't be surprised if you would give the same advice, is that there's so much ebullience in the market. There's probably a better word than that, but that's the one that came up. There's just so much froth that everyone wants to be in this environment, whether it's AI or entrepreneurialism or venture. Like, there's so much froth around it that I think people forget how freaking tough it is.
Right.
We were talking about, like, the reason that I keep on coming back, like, Figma took 13 years, and there are a lot of ups and downs along the way. And it wasn't evident that Dylan was going to be CEO throughout the way. He'll tell that to you himself. So I think that you really have to be passionate about what you're doing and see the purpose in it, rather than think that this is going to be just a sensational, job that is going to pay off well and is worth sort of entering the game.
Yeah, there are a lot of people who see dollars right now, but it's like it's like, oh, that's an interesting idea. Like, go find someone to actually build that, like build the product, and then maybe, you'll have the start of something. In some ways, I feel like the AI story that it's like, oh, it's so easy to build a product now has created this proliferation of like company ideas.
Right.
And maybe to bring it back to Figma, design could be a differentiator for your company actually functioning well. If you're vibe coding a company, if the design is not good, it doesn't come through. So we need Figma Mate to bring us all there.
Thank you so much.
Danny Reimer, thanks so much for joining us.
Thanks so much, folks. Take care. Bye-bye.